So welcome. This is KASNEB paper ATD level 2 financial accounting. The paper was done in May 2021. Specifically, we'll be tackling question 1. So Rebecca Mwalimu, a sole trader, does not keep a complete set of records. However, the following balances have been extracted from her business records. So summary of the bank statement for the end at 1st Dec 2020. This is the summary. Of course, these are bank statement. These are summary of bank statement. So this side we have the receipts. Basically, this side we have the receipts. The receipts. Then this side we have the payments. So these are the payments that were done in that year and the receipts that were received that year. And assets and liabilities other than balance at bank: accounts payable, accounts receivable, rent accrued, bus at cost, lorry at cost, inventory, and insurance prepaid. Those are the figures. So these are the starting balances and then the closing balances. Additional information: all receipts are banked and all payments are made from the business bank account. Accounts receivable amounting to 600,000 are included in the accounts receivable as at 1st December 2020 to be written off as an recoverable debt. Then it is Rebecca Mwalimu's policy to provide depreciation at the rate of 20% on the cost of motor vehicle held at the end of each financial year. No depreciation is provided in the year of sale or disposal of the motor vehicle. Discounts received during the year ended at 1st Dec 2020 from accounts payable amounted to 2,200. Okay, statement of profit and loss for the year ended at 1st Dec. That's what is expected of us. And statement of financial position as at the same period. So, this is Rebecca Mwalimu. We'll start with the first part. Rebecca Mwalimu income statement for the period ended at 1st Dec 2020. Then we prepare the columns and then sales. And for the sales now, we have to come here and find our sales. That is the trading part of income statement. Normally, it's trading account, P&L account, and then appropriation account. So for the trading account, it's just sales less cost of sales, and we have gross profit. So we are looking for the sales. We'll simply come back to the question, look for sales, and looks like the sales has not been given to us directly, but this can play the same role. Cash received from accounts receivable. Cash from accounts receivable. That is money received from the customers, and that is 192,000. But remember, there's something here about accounts receivable. There's some debts which were carried forward, 14,640 for last year. They were carried forward this year. And then this 19,000 for this year was carried forward to the following year. So if we were to find the actual sales for this year, it will actually be 192,000 plus this that is being carried forward to the following year minus this that belongs to last year. So this 192 plus 19 minus 14, that should give us the figure that we are interested in. But for the sake of finding out for the sake of this is we have to show the workings. We will have to come up with a ledger, a T account. So we'll come up with a T account. That's how a T account looks like. Call this maybe working 1, accounts receivable account. So this is credit, this is debit. And then we'll say, because this is an outstanding, debtors, accounts receivable generally are assets. So because we have this is an accrual, we'll have it on the credit side. So balance brought down, this is 14,640. And then of course these guys are the debtors paid. They reduce their liabilities. When they pay, we debit, so that no, I think there's a problem here. It's balance brought down. Balance brought down 14,640. Yeah, 14,640, like that. Show that it's an asset. But generally, debtors are an asset. So balance brought down 14,640. And then when they pay, cash from accounts receivable. So this should come from this side. So bank, how much? 192,000. You can see it's on the credit side, and then it comes to the the bank account, it will affect the debit side. And then balance carried down, that will be the 19,000. So this will give us how much? This will give us 192 plus 19. 192 plus 19, that gives us 211. So 211,000. 211,000 minus 146 minus 14,640. 211 minus 14,640. This gives us 196,360. 196,360. So this is what will now transfer to the trading account. Trading account. So trading account, the figure that will go there will be 196,360. So we simply come here and say sales 196,360. Unless if we have some workings that can reduce that, but if we don't have, we go to the cost of sales. So let's just check if we have any workings that will affect the sales. Check if there are any workings that will affect the sales. There's no working that will affect the sales, so we go straight to the opening stock. Opening stock is, you can see it's here. So opening stock 9,800. So we'll simply come here and say opening stock 9,800. Then we add purchases. We add purchases. So what is the figure for purchases? And purchases will have to repeat the same thing, because purchase we have accounts payable, so we'll just do the same thing here. So we'll open an account here for purchases. This is accounts payable, trade payable account. So credit, debit, then we'll have the balance, because this is a credit account. We'll have balance brought down 9,400. Balance BD 9,400. Then the amount that we paid. Now when we pay, you can see payment to suppliers 144,000. So this is on the credit side, so it will affect the debit side. So simply say bank 144,000, and then you say balance carried down. How much? We come and pick this figure 5180. 5180. Then you close the account like that, close the account like that. So we add 144,000 plus 5180. This gives us 149,180. 149,180. 149,180 minus 94. That gives us 139,780. 139,780. So this is a trading account, again to trading account. So 139,780 will be the figure that will come here. 139,780. Then we, unless if we have workings, you can push it in the inner column. Check if we have any workings, anything that will affect purchases. Purchases, this purchase of a lorry. So if there's nothing, we move on. We pick the closing stock. Closing stock is 11,800. That one's direct from the question. So closing stock 11,800. This gives us plus 9,800 minus 11,800. That gives us 137,780. 137,780. Less 96,360. 58,580. So these are gross profit. Gross profit. Then you look for incomes and gains. Incomes and gains. So check around if we have any incomes and gains. I'm very sure we have some income, some gains. So cash from sale of private car 40,000, sale of bus 4,200. For this sale, anything we are selling, this is sale of a private car 40,000. So private car doesn't have anything to do with the business. Sale of business 4,200. we have to find out what is the value of this sale of bus, 4,200. What was the value of this bus? If the value of the bus was higher than what was sold, then it's a loss. But if it was less than what was sold, then it's a gain. So purchase of lorry, this side I'm not seeing anything. So bus, it is the bus that we sold. So we sold bus at 4,200. What was the value of the bus? Bus at cost is 20,000, accumulated depreciation 16,000. So it means the value of the bus was 4,000 and it was sold at 4,200. So what this means is that there is a gain of 200. So gain on sale of bus, how much? 200. Do you have any other? I think there was another one. Yeah, discount received during the year amounted, accounts payable amounted to 2.2. So remember, these zeros will have to, they have not been restricted, so we'll have to restrict them. So discount received 2,200. We'll simply come here, discount received 2,200. So this gives us 2,400. We add this, we'll get 6,980. Good. Then we go to expenses and losses. Expenses and losses. So for expenses and losses, we again start from here. The best point to get all these things is here, the payments. So payment suppliers, purchase of a lorry, of course that's not an expense. Rent 5,200. And there was rent accrued. So we'll simply come here and say rent. Rent. And since there was rent accrued, we'll be forced to open an account here to see the figures that we're going to use. So rent account. So we'll start with this is rent accrued. So rent accrued is 400. Rent accrued 400. Since it's accrued, it will be on the credit side. Balance brought down 400. Then rent itself is an expense. So bank, how much was paid, and you can see here on the rent is on the credit side. So 5,200, 5,200, and then we'll have the balance carried down, which was the accrued as of this year. This is 520, 520. So this makes it 5720. 5720, that will become our balancing figure. So the difference is 5320, and this will go to P&L account. So when you come to P&L account, we can call this this is working 2, then call this working 3. So when you come to P&L account, say working 3, and the figure was 1320, I think 5320. The figure is 5320. Since we have so many other expenses, we put that in the inner column. And then we go back. Rent motor vehicle expenses 6,700. Do you have anything here for motor vehicle expenses? Specific expenses. Motor vehicle expenses 6,700. There's nothing, so you write it as it is. Motor vehicle expenses. Motor vehicle expenses 6,700. Then we move to the next item. Wages 30,200. Do we have wages here? Wages. There's nothing on wages. Wages, nothing. So you simply come here, pick it as it is. Wages 30,200. Then next, stationery 2720. Stationery 2720. Do you have anything here? Stationery 2720, nothing. Stationery 2720, so we pick it as it is. Stationery 2720. Stationery 2720. Then next, Drawings, no, drawings doesn't come to P&L, it will come to the balance sheet. General expenses 1300. Do you have anything general expenses? 1300, nothing. So general expenses 1300. General expenses 1300. Then next, insurance 1600. Insurance, yeah, we have insurance there. So insurance, that one will have to do the workings. So insurance, let's do the workings. So insurance, prepaid, So what do we have? We'll come here. This is working for insurance account. So credit, then debit. Now this insurance is prepaid. Prepaid means now this is actually the insurance for this year. The 400 is for the following year. So we just simply take this for this year plus what was paid minus what is not for this year. That's how we go about it. So what we'll do is because it's an asset prepaid, we say balance brought down 320. Balance brought down 320. So balance brought down 320. Then we add what was paid. What was paid this year? I think it was 1600. Let's just confirm that figure. Insurance 1600 less what was paid but was not for this year. So balance carried down. Balance carried down 400. So to P&L, we will have, this is 1920. Then this side also 1920 as our balancing figure. So it means here we have 1520. So we simply come here and say insurance, the figure is 1520, like that. Then we move on. That was insurance, so balance, we are done with that. Let's check this side. Rent accrued, we are done. Bus at cost, we are done. Okay, there's something about bus. The bus was sold this year. There's some additional information here about the bus. That it is Rebecca Malimu's policy to provide depreciation at the rate of 20% on the cost of motor vehicle held at the end of each financial year. No depreciation is provided in the year of sale or disposal of the motor vehicle. The year of sale or disposal of the motor vehicle. So this vehicle here was sold this year. So it means there's no depreciation I'm going to charge for this year. So that one, no depreciation. Let's look at the next one, lorry at cost. This lorry, it's the same lorry that was purchased. This is a purchase of a lorry 26,000. Now we have a lorry 26,000 accumulated depreciation. Because it's a new lorry, we are simply going to calculate the depreciation. So depreciation for the 20% on the cost of motor vehicle. So 20% of 26,000, that is simply 5,200. So we'll simply come here and say depreciation on the lorry. Depreciation on the lorry. This is 20% of 2600, which is 5,200. Good. Then so we are done with that part. We are done with that part. So we proceed. So lorry at cost, that one we are done. Inventory, insurance prepaid, we are done. All receipts are bank. Accounts receivable amounting to 600 are included in the accounts receivable as at to be written off. So this is just bad debt written off, 600. Normally we provide that. It's a loss to the business. So bad debt written off, 600. Bad debt written off. This is 600. Remember the zeros? We just have been restricted. So we are done with depreciation. Discounts received during the year. That I think we have captured the discounts received. Yeah. So let's get the total. This will be 5320 plus 6700 plus 3200 plus 2720 plus 1300 plus 1520 plus 5200 plus 600. This gives us 63,560. 63,560. 63,560. This is almost a loss. Let's get the total again. Let's get this figure again, see if it's correct. So 5320 plus 6700 plus 3200 plus 2720 plus 1300 plus 1520 plus 5200 plus 600. That gives us 53,560. Sorry, 53,560 and not 63,560. So minus 6980. This gives us 7420. 7420 as our net profit. So this becomes our net profit. Just like that. That's how you go about it. So we are done with the first part because they just wanted a statement of profit and loss for the year ended at first. So we are going to the second part, statement of financial position. So Rebecca Mwalimu will come here and say Rebecca Mwalimu. Let's just start from here. So this is Rebecca Mwalimu. Statement of financial position. Statement of financial position. As at 31st December 2020, like that. Then of course we'll have the three columns and we'll start with the non-current assets. So we have the book value, we have the accumulated depreciation column, and we have the net book value column. All of them are in shillings and we are restricting the zeros. So let's start with the motor vehicle non-current assets. I think we have the non-current assets that these are private car and it was sold. So there's a lorry here that was purchased. Other than the lorry, there's a bus that was sold. So this bus is no more. Remember, it was sold. So lorry at cost. We only have the lorry 26,000 with the depreciation. It doesn't have accumulated depreciation. So for non-current assets, we only have the lorry. So we'll have here the lorry, and then we have the book value is 26,000, depreciation is 5,200, so net book value is 20,800. Good. Then we go to current assets, and under current assets we have closing inventory. Remember this figure, with this one we just pick straight from here. Inventory is here, 11,800 at the end of the year. 11,800. So those are figures you just pick as they are. 11,800. Then we go to the next one. Let's now pick from the question. We start number one. So the bank, you can see bank balance 4020. This is bank at 31st December. These are the payments and receipts for the bank that year. But at the end of the year, we had 4020. So bank 4020. Bank 4020. Bank 4020. Good. Then next, bank 4020. Accounts receivable. Accounts receivable, the figure is 19,000. Accounts receivable. The figure is 19,000, but remember we had what? We had bad debts written off. So bad debt written off of 600. So this makes the figure 18,400, like that. Good. Then where do we go next? Rent accrued. Accrued, that one is not. Inventory. Insurance prepaid. This one is an asset, 400, what we had prepaid for the following year, 2021, yet we are still in 2020. So prepaid insurance, 400 is an asset, it's a current asset. Prepaid insurance, 400. So prepaid insurance, 400. Let's check if there's anything else. I think we are almost at the very bottom end. So this one captured. Okay. So that is the whole thing. So 11,800 plus 4020 plus 18,400 plus 400. This gives us 34,620. So 34,620. Then current liabilities. So for current liabilities, we simply come back here. Do you have current liabilities here? Chances are I will not get them here. Yeah, accounts payable, 5180. But wait a minute, discount received during the year from accounts payable. So we are going to deduct this from, so accounts payable 5180. And then there is some discount that the suppliers gave us of 2,200. So accounts payable 5180, then discount received was 2,200. So this gave us 5180 minus 2,200. That gives us 2980. 2980. Good. Do you have any other? Yeah, we had some outstandings here. Rent accrued, of course, these are rent accrued 520. What else? Check what else? Nothing more. So rent accrued 520. Rent accrued 520. Accrued rent 520. So we get the total 2980 plus 520. This gives us 3,500. So, and this is a liability. So we take the non-current assets plus current assets. Non-current assets plus current assets, 34,620 minus 35. This gives us 51,920. 51,920. This is our net capital employed. Net capital employed, 51,920. Then we go the other side, financed by section. So we'll have the capital, financed by capital. So what is the capital? We'll come back here. Capital. How do we compute capital? Are we given the capital? So you don't have the capital, but that's not a bother. If you don't have the capital, just check how they started that year. You can see 1st January 2020. So let's get the assets, less the liabilities as at 1st January 2020, and we'll have our capital. So capital account, we'll call it the accumulated fund account. Accumulated fund account. So credit, debit, have basically the assets and the liabilities. So let's pick assets and the liabilities. Accounts payable 94, that's a liability. So accounts payable 94. Then we are just dealing with what was there opening. Accounts receivable 14,640. Accounts receivable 14,640. Then next, rent accrued 400. Rent accrued is a liability. Rent accrued 400, that's a liability, so we'll have it here. Rent accrued 400. Then let's continue. Bus at cost. So bus, the value of the bus at the beginning of the year was 20,000, accumulated depreciation 16,000. So the value of the bus at the beginning of the year was 4,000. So bus at cost 4,000, that's an asset. So simply come here, bus at cost 4,000. Bus at cost, how much? 4,000. It's an asset. So we put it on the debit side. Lorry at cost, we didn't have lorry for that year. Inventory 9,800. Inventory 9,800. Inventory is an asset, 9,800. And of course, prepaid insurance. Prepaid insurance, which was, what is the value? Prepaid insurance is an asset. So 320 on the asset side. 320 on the asset side. I think we are done. 320 on the asset side. Oh, sorry, there was something bank statement that 1st December at the beginning of the year, 1st January 2020, 3940. So bank 3940. Bank, we have 3940. So let's get the total. Let's get the total. We get the total. So this will be 14,640 plus 4,000 plus 98 plus 320 plus 3940. This gives us 32,700. So 32,700. 32,700. So minus 8. That gives us 22,900. So our capital, simply come here and say capital 22,900. Capital 22,900, like that. That's our capital. Capital. So sale of private car. I think the fact that this money came into the business, you can call it additional capital. Sale of private car, let's call it additional capital, because the money came into the business. And because of that, we don't need to put this in the outermost column. Let's put it here, so that 22,900. And then we say additional capital. Where I sold is private car. So additional capital 40,000. This makes it 62,900. Then we add the net profit. Net profit you can get from the statement of the income statement, 7420. 7420. And then I think there was drawings. So let's check if there are drawings here. Normally we talk of sole proprietorship is simply capital plus net profit minus drawings. Yes, there is drawings. You can see 18,400 drawings, 18,400. So we less drawings of 18,400. Drawings 18,400. So this gives us, should give us the same figure, 62,900 plus 7420 minus 18,400. That is 51,920. 51,920. I think that's the figure we have up here. Good. So we are done. This is our net capital employed. Net capital employed 51,920. Net capital employed 51,920. So the question is done. It is balanced. That is the end of it. This is a question that should take you average. This is working 5. So you can simply come here and say working 5. This is a question that should take you less than 30 minutes. Okay, 5 like that. Less than 30 minutes. It has taken us how many minutes? 34 minutes. It has taken us 34 minutes. For you, it should take you less than 30 minutes. Otherwise, share, subscribe, and wish you success in your exams.